Okay, let's dive right into this. Welcome to today's Explainer, where we are embarking on a seriously exciting journey together. We're going to take you from a complete beginner, someone who just looks at a price chart and sees absolute pure chaos, and equip you with the knowledge to become a real market killer. We're breaking down a fascinating source today called The Blueprint for Market Mastery. And hey, if you've ever felt completely overwhelmed by all the technical jargon in trading, don't worry. We're going to strip away all that noise and give you a perfectly structured, highly actionable path so you can understand exactly how the pros operate. Here is our roadmap for today. First, we're going to pick your trading style. Next, we'll decode market structure basics. Then we build your trading identity, walk through the little M trade plan, and finally, we'll actually execute your very first trade. It's a safe, structured path from complex theory to exact execution. All right, step one, pick your trading style. Before you even touch a candlestick chart or open up a brokerage account, you have to make a vital decision. You need to choose exactly how you want to interact with the market. And honestly, this all comes down to finding the specific time frame that matches your personality and your lifestyle. There are basically four main camps you can fall into. Up at the top, you have the scalper. These guys operate on the 1 to 15-minute charts. It is fast, and frankly, it's incredibly stressful. You're taking a ton of trades. The source material actually puts it incredibly bluntly. Scalping is strictly for psychos or professionals. Right beneath that is the day trader. They operate on the 15-minute to 1-hour charts, getting in and out of the market on the exact same day. Moving down, we've got the swing trader, operating on the 4-hour to daily charts. It's a much more chill approach, holding trades for 2 to 5 days. And finally, at the bottom, the position trader looks at weekly charts, acting much more like your traditional long-term investor. So the absolutely crucial point here is this. If you're just starting out, the best thing you can possibly do is start as a swing trader or a day trader. If you actually want to survive the learning curve without completely frying your nervous system in the first week, stick strictly to these two styles. It keeps you safe, it keeps you focused, and it gives you the breathing room you need to actually analyze the charts properly. Moving right along to step two, mastering market structure basics. You see, the market isn't entirely random, and understanding the structure behind it is the very foundation of how professionals make their moves. The pros use a powerful method called top-down analysis. They don't just open a fast-moving, crazy chart and guess, no way. They systematically drill down. It's like looking at a map. They start way zoomed out on the weekly chart just to ask one big question. Where is the macro trend going? Is it up, down, or sideways? Then they zoom into the daily chart to mark the key highs, lows, support, and resistance levels. Next, they drop to the 4-hour chart to find specific liquidity zones. And finally, they zoom all the way into the 15-minute micro chart to find their exact entry trigger. By looking at the whole board this way, they execute with massive confidence, all while risking only 1 to 2% maximum per trade. While you're doing that top-down analysis, you're going to be hunting for something very specific. It's called an FVG, or a fair value gap. Basically, it's just an imbalance in price, where the market moves so aggressively fast that it didn't fill in properly. Why does this matter to us? Well, because price usually acts like a giant magnet, eventually returning to fill that imbalance. Finding an FVG is like finding a literal gold mine on your chart. Let's actually break that abstract FVG concept down into a very clear, highly visual 3-candle checklist. You can easily spot an FVG by looking at a sequence of just 3 candles. Step 1, you find a candle that made a massive aggressive move. Step 2, you look at its huge wick or body. Step 3, you look at the third candle in that sequence continuing the move, but crucially leaving a gap where it doesn't overlap at all with the first candle. That empty space right in the middle, yep, that's your fair value gap. Once you find these setups, you have to decide your direction. Trend trading is flowing perfectly with the market's momentum, and it is universally the safer path. Counter trading, on the other hand, is betting against the current direction. It's far riskier and requires absolute sniper precision. The strict warning from the source material is super clear here. Unless you deeply understand market structure, liquidity traps, and the news cycle, do not counter trade. Always flow with the trend. Now for section 3, build your trading identity. Let's pivot away from the heavy technical theory for just a second, because frankly, none of it matters without the right mindset. This is the psychological armor you absolutely must put on before you risk a single dollar. Listen to this mantra and truly absorb it. I study, I observe, I wait, I strike. I risk only what I can lose. I respect my system. The source suggests you repeat this to yourself daily. This is pure professional discipline. This level of patience, It's exactly what separates a real market killer from a YouTube hype boy who's just gambling based on emotion. Combine the system with your daily life habits, and you're going to start building an unstoppable empire. Okay, let's put this into practice with Section 4, the Little M Trade Plan. With that strict discipline locked into your mind, let's look at an amazing practical example. To prove just how straightforward the actual execution can be, we're looking at a case study of a 10-year-old boy named Little M. We're going to help him trade Bitcoin on a platform called Exness using the MetaTrader 5 software. $50. That right there is the entire account balance Little M is working with. We are intentionally emphasizing a very small, perfectly safe scale for this practice run. The scenario is this. Bitcoin is currently sitting at exactly $100,000, and Little M has studied the chart and believes it's going to go up. He wants to place a buy order. Now, what's really interesting about this plan is how perfectly structured it is before Little M even touches a single button. His entry price is $100,000. If he's right, his take profit is securely set at $105,000. But if he's wrong, he's completely protected. His stop loss will automatically cut the trade at $99,000, limiting his loss to just a tiny fraction of his account. And look closely at the lot size, 0.01. This is absolutely critical. Because Bitcoin makes such massive moves, 0.01 is the safest, smallest volume you can possibly use for practice. Let's move to step 5 and see how this builds. Execute your first trade. Time to turn that theoretical plan into real action. Here are your very first interactions with the MT5 app. Step 1, you open the app and go straight to the quotes tab at the bottom. Step 2, you scan the list, find BTC/USD, and just tap it. If it isn't there, no worries. You just tap the little plus sign at the top right to add it. Step 3, a menu pops up and you select New Order. You want to double check that the order type at the very top says Market Execution, which simply means you want to enter the market right now at the current live price. Next up, we take those parameters we planned out earlier and punch them in. First, go to the volume box and type 0.01. Again, vital for account safety. Second, go to the stop loss box and type exactly 99,000. Third, go to the take profit box and type 105,000. Once you verify those numbers perfectly match your plan, you arrive at step 4. You tap that big green buy market button. Boom. Just like that, Little M is officially in his very first trade. Now that you're in the market, you are in full control. To watch your trade live, just navigate over to the Trade tab at the bottom of your screen. You'll see exactly how much you're winning or losing in real time. And remember, your safety nets, the stop loss and take profit, are already locked in. They'll trigger automatically if the price hits them. However, if you're up a few bucks and decide you want to secure that profit early, you simply tap the open trade, hit close, and slide the bar to exit manually at any time. You are always in the driver's seat. So, before you execute any trade going forward, you must ask yourself one crucial question. If I lose this trade, can I live with it? Managing your risk is what actually makes you a sustainable trader, not just a gambler who gets lucky once or twice. You now have the exact blueprint to execute the mechanics, but do you have the emotional discipline to survive the chaotic days when the market turns against you? Thank you so much for joining me on this explainer. Respect your system, manage your risk, and I'll see you next time.